Let's make an impact on society. Hey, welcome to Meta Impact. My name is Nico. It's good to be back with you today. Thanks for tuning in. If you're new here, welcome. And if you're coming back, thank you. I genuinely appreciate every single one of my viewers. You guys are absolutely amazing. I've appreciated every comment, every little bit of feedback. As you know, on this show, we like to focus on getting closer together to our financial freedom while also choosing things to invest in that are going to make an impact on the world and create a better future. So today's going to be a little bit different. What I'm going to do is go over some topics that I think are really important right now as far as investing goes and some of the themes that I'm interested in. It's going to be a little bit more free form than my normal episodes. And then I'm going to answer questions from you guys that you've so graciously offered up. And I'm so thankful for that. So without further ado, let's just jump right into some of these topics. So first of all, I want to do a little disclaimer. This is not financial advice. I'm not a financial advisor. This is not meant to be taken literally. Anything that I say are my opinions, and they're meant to be for fun and for entertainment and for education. But please do your own research, make all of your own decisions. My angle, if you start to follow me, I hope, is that I explain things in really common terms. I want things to be very understandable. That is what I want to be my differentiator. So if you appreciate that, stick with the show. I'm going to try to give you a lot of value. There have been down markets recently. Both the stock market and the crypto market have been down this past week and are really down right now. And so I've gotten a lot of people asking me what my thoughts are on that and how much lower it may go and what am I doing. And the answer is when I've had about 12 years of experience in investing, and what I find is really important is to just be steady through the downtimes. I've gotten to the point now where I actually kind of enjoy when markets pull back. I kind of look at it like nature, where there's a day and a night, and there's good and there's bad in the world, and there has to be ups and downs in the world. So during pullbacks, I try not to ever overreact. The same thing as when markets go up. There's actually a quote, I hate to admit this sometimes, but I am a New York Jets fan, and one of our best players ever, Curtis Martin, he was a great running back for the Jets, and he used to say, you know, when the spotlight is brightest, when you're at your lowest or your highest, is when you will be judged for your character with the most scrutiny. And so I think about that when markets are really high, when they're really low, and I take a deep breath and I don't overreact. I stick with my game plan. I think that investing the right way is a lot like living your life the right way, which is really steady, right? So stick with your plans. So I want to talk a little bit about market fundamentals, and this is something that I really look into regularly. What I mean by market fundamentals specifically is monetary and fiscal policy, and it's kind of like a nerdy thing, but I think it's important for my viewers to know that I do look at the macro landscape of economics, and I do this at least once a week and review what like the Federal Reserve is doing and looking at what Congress and the government are doing. So first, when it comes to monetary policy, just in common terms, it looks like the environment is still very risk on, very green light. Everything that the Federal Reserve is saying right now has to do with low interest rates and promoting an environment of continued growth. Now, why they're doing that, I'm not going to go into a deep technical analysis of why the Federal Reserve is doing what they're doing in this very granular detail, but it's absolutely certain right now to me, and these are all just my opinions, that the things they're saying, they want full employment and they want low interest rates because they want the economy to continue to thrive and come through the global situation, the virus situation that we're in now, and end up on the other side of that in a really good place. And that part of that is wanting full employment. So their policies are fixed on, you know, increasing inflation at least 2% year over year over time, over at least the next few years. So what that says to me is that we're going to continue in a big picture to be in an environment that's friendly to people looking to invest, particularly in assets like stocks and crypto. As far as fiscal policy goes, this has to do with what the government itself is doing. The Federal Reserve is technically supposed to be separate from the government and the legislature, the Congress, who passes, formal bills and actions of the government. As far as that goes, in the fiscal side of things, it looks like we're also in what I would consider like a risk on, a green light environment, because especially, and this is one thing I really want to focus on that I do study, is that historically, if the market right now in the short term is having pain, it's, the stock market is pulling back and unemployment is still problematic, I think it's most likely that Congress will push forward with things like the stimulus, which is good for the people, the population of our country. I think they'll also, after the stimulus goes through, and I think that some good version of it that will help people, which is, I really care about that. I want to see people get out of this economic grind that they're in, this low point. Is that I also think that we'll probably have infrastructure for our country come up very soon. I think that is in the cards over the next couple years. It's just my opinion. I think infrastructure, our country is sort of falling apart with roads and bridges and buildings, etc. And that's what I think we're going to be looking at over the medium term, the next couple years. So when I think about investing and I see a down market right now, I'm not panicking, especially because I understand the larger framework of how our country, with the place that we're in right now. That doesn't account for what are called black swan events. There could always be something like another major global virus. There could be a war. There could be something we could never imagine. And that's why I think that key fundamental principles of investing steady all the time and learning how to balance emotionality is so important when it comes to being a smart investor. And I want to help people. That's part of getting to your financial freedom, because the less mistakes we make and the less we're influenced by FUD, by fear, uncertainty, and doubt, and by reacting to market volatility, I believe in the long game, the quicker we'll be able to get that financial freedom, whether that means retiring early or being able to put kids through college, or pursue another dream or passion. That's something that's really important to me, to help other people if I can, if that's something that people so desire, to sort of take that knowledge and do with it what they will. All right, so I think it's also important to mention that with regard to the Federal Reserve pushing the stimulus and pushing the printing of money, increasing the supply of money, this is really good for not just stocks, but it's also good for real estate, and it's really good for fixed supply assets like Bitcoin. And that's one of the reasons why I'm so into Bitcoin and cryptocurrencies right now, especially Bitcoin, because I think it will hold its value over time compared to a lot of other assets. And we're seeing what you would call smart money, big companies and institutions converting a lot of their cash into Bitcoin, because over time it looks like in the 12 years it's been around, it has appreciated better than any other asset at all in the world. And so I take that approach personally, converting as much of my cash emergency funds that I have into Bitcoin to sort of protect myself for the future. All right, so following up from some of my recent material, particularly the last video I made, it was about Cardano, ADA, one of my absolute favorite cryptocurrencies. I just wanted to follow up on that, and one thing I didn't really expand on, but I wanted to mention now, is one of the factors of why it can be so big. It's right now, at this moment, it's in the top 3 or 4 of all cryptocurrencies as far as the size, with Bitcoin and Ethereum. But unlike Bitcoin and Ethereum, which you can buy in almost any exchange, Cardano you can't get almost anywhere. It's only available on several different exchanges. I know it's available on Binance, both internationally in the United States, and on the CASHAPP, the Voyager, which is one of my favorite ways to buy it myself. And you can also get it in certain other wallets, but it's not everywhere. And so what it looks like is happening from the news that I'm reading is that it is potent. Now, again, not investing advice, but this is an insight that leads me to want to invest in this asset is that people want to invest in this, and institutions want to buy Cardano. And so how will they do that? And there's ways to buy assets through trusts through the stock market. And there's a company called Grayscale Trust, and they have Bitcoin and Ethereum stock. I mean, you can buy Bitcoin in the stock ticker GBTC or Ethereum ETHE in any major stockbroker account, like a Fidelity or TD Ameritrade and things like that, Charles Schwab. And I own some of those in my stock portfolios because I have Roth and regular IRAs, and that's a nice way to be able to buy and get some exposure to Bitcoin and Ethereum. But Cardano does not have its own trust yet in its own stock. When that happens, and if that happens, and there's a lot of evidence showing that it may happen soon, then that would be a huge tailwind catalyst for Cardano. Additionally, it's also, Cardano is not listed on a lot of the major places that are selling cryptocurrencies like Robinhood or PayPal, or which are the real retail places. And then you have the exchanges like Coinbase or Gemini. They're not listing Cardano right now. When those start to pick up on Cardano, the amount of liquidity and the amount of people who can now invest in this really exciting technology is just going to go up. At least that's my opinion. And so I wanted to just, share a little bit more and a little more evidence as to why I'm so excited and did that video on Cardano. I think it's really going to have a lot of exciting future potential. All right, so I want to go into some of the major questions, the big questions that I've seen, both direct messages to me and through my videos, and or questions and topics, and answer them and comment on them because my viewers who are tuning in and taking the time to comment means the world to me, and they deserve an answer and some thoughts. So the first one is the issue of Voyager. The Voyager app, where it's a brokerage and you can buy crypto on. I've talked about it in almost all my videos because I really love this company. I'll do a video all about Voyager and their token and how it works in the really near future. But one of the big frustrations is that it's so popular and the crypto industry is growing so fast that it has this wait list and it's backed up still. It's really frustrating for a lot of people. And I want to apologize because I hate promoting something that's causing people such frustration. And I wish more people could get in on Voyager sooner because it is such a rare value proposition to be able to buy and sell really fair prices and build your investment portfolio there while also earning interest on a lot of the major crypto assets. That's why I love it so much. So I apologize to anyone who's listened to me and has tried to sign up and is on a wait list. All right, so one of the really good questions, and it's a point that a couple people made from a recent video, is I didn't describe the cryptocurrency bull cycles, the 4-year cycles, and where we are right now in that cycle. At least in my last video, I kind of neglected that. I just mentioned that we're in a cycle, and it was a really good point that the viewer made, is that we are in the final year of the 4 years, and these 4-year cycles typically end with a really strong up market. That was a really important point that the person made. I wanted to clarify that I do know and believe that we are in the bull moment right now, and that's why we're seeing Bitcoin in the news and cryptocurrencies in the news, because these prices keep going up. Now they've pulled back significantly, 20-25% over the past few days, a week or so now, and it's scary. But I want to reiterate something I've said in previous videos. And then 4 years ago, in the last bull market in 2017, there were at least 6 times that the market pulled back at least 30%, right? 30% is just a huge drop in the market. So to put that in perspective, in this year, we're early in this 4th year, the current pullback isn't even a 30% drop. So we only had one drop in January that went down at least 30% in Bitcoin. And I think that bodes very well, and it's very positive and hopeful that over the next 2 to 3 weeks, my expectation is that we drop potentially a little bit more. There's another question that I got is, are we going to drop more? And I think it's probable, because we're only down right now 20-25% off of the Bitcoin high of 58,000 or so. So I think we're going to probably pull back more, and I think people are going to panic. If you're watching, don't panic. That's the best thing you can do, is not sell when you're scared and not sell out of fear. And the only time I would say to people, and this is my opinion only, but this is what I live by, is I would only consider selling if I had a family or personal emergency. Then yeah, then anything goes, right? But if it had to do with outside factors that I don't control, like market forces and news articles and things like that, I wouldn't buy into that negativity. I would just hold on, maybe even add a little bit more. That's, some people ask me all the time, when do I buy? When do I buy? And if you're pulling back, 20, 25, 30%, then if you're doing a disciplined dollar cost averaging method, which is what most of my investing is based on, is just that steady as you go approach, then you should have the flexibility to add a little bit more. So what I would do, when they pull back, to sort of answer this question, what to do, is when I get a paycheck, for example, next Friday, I'll take a small little extra amount, the amount that I would normally use to take the family to the movie theater. And since we're not going to the movies right now because of this global situation, I think to myself, well, okay, I'll take that $50 and I'll add that into Bitcoin or whatever is really down right now, one of my high conviction positions. So that's how, that's some comments on down markets, volatility, and how I like to invest through those. People ask me a lot, I'm getting a lot of people who are really new to crypto and new to investing, and maybe you're really experienced, you're watching this and you have a lot of experience in the stock market and crypto. Hopefully you can still get something out of this, because people ask me, like, what would you do if you were just starting right now? Okay, that's a fair question, because a lot of people are jumping in, and if that's you, congratulations, this is exciting. You're in a bull market and the prices are generally going up, and this is like a life-changing moment with cryptocurrencies getting national attention. So what I would do is I would start out with my personal top 5 that I have right now, which are Bitcoin, Ethereum, VGX, which is the Voyager token, Cardano, and Polkadot. And I think that right there you get a really nice variety of coins. You get a little bit of diversification there. You get the big one, which is Bitcoin, which is your storage of value, and it is a fixed supply asset. It's the gold standard of cryptocurrencies. I would start with the majority allocation there, and then after that, a little bit of a mix, is Ethereum, Cardano, and Polkadot are all open source blockchains based on decentralization and smart contracts. And that's a fancy way of saying they're supercomputers, right, that you can do stuff with. And then the Voyager token, which I can't wait to talk more about in detail, but it's a utility token, and it's part of the Voyager company, so that it's their token, and it confers a tremendous amount of rewards if you invest through that app. And I think it's why it's one of my top picks, because I think it just has a very powerful network effect. So those are the top 5, and what I would do with those top 5 is I would just start dollar cost averaging into those. I'd figure out what I could afford to put in every week or every paycheck, and that's what I would do. I'd start building it up, and I might put more into Bitcoin at first, because that's your gold standard. I want to have like that foundation to build on. I might even do Bitcoin only in the very beginning and do the majority allocation for my first couple deposits, just do Bitcoin, because I feel like that's the great foundation if you're getting into this crypto space. The other thing I want to say about if you're just starting out is make sure that you take care of your fundamentals. And what I mean by that is, again, this is what I do and is not direct advice, but this is general advice that I've learned, is, pay off your high interest debts and credit cards before you put any extra money into things like cryptocurrencies or the stock market outside of your retirement account. And secondly, if you have a retirement account, I was always taught to max that out. And especially if it has a match, if you get free money from your employer, you want to take care of that first. And then you also want to have an emergency savings fund, so you can pay for at least 3 months of emergency expenses if something crazy happens. So that's how my approach. You know, pay off your high debts, high interest debts, have an emergency fund, and make sure I am maxing out my or my spouse's retirement accounts with the matching money from the employer first. And then it comes to the money that you can afford to lose. And I talk about this in more detail in my second to last video, which was about Bitcoin crashing. And I talk about the fundamentals that deal with volatility. So check that out if you haven't seen that video yet. All right. So I got one comment that was pretty funny, and I wanted to end with this one. Somebody said that they think I might look like the guy from Rudy, which I thought was pretty great. I've gotten that my whole life, actually, and that's Sean Astin. So yeah, rock on Sam Gamgee, right, from Lord of the Rings. So I really appreciate it. There's too many questions to get to all of them, but it's been a pleasure spending a few moments with you here on the weekend. Again, thank you so much for viewing. It means the world to me. Stick around. More videos are coming out over the next few days and weeks. If you haven't yet, and you got value out of this video, please subscribe, hit the notification bell, smash the like button, and thanks for staying to the end. God bless. Peace.
Supporting themes, companies, and ideas that make the world a better place.